This hurts every American citizen. In this episode, I'm going to address Biden tax increases, biggest in nearly 30 years. So if you've been feeling confused, isolated, or powerless because of what you're hearing that's in the works with the tax increases that President Biden is proposing, get ready and I'll summarize all of them and what you can do to protect yourself from the taxes and inflation that will be the result of these policies. So my name's Doug Andrew, and I've been a financial strategist and a retirement planning specialist now for more than 4.5 decades. I've helped many people prepare for long-term goals like retirement and protect their hard-earned money that they're setting aside for goals such as retirement or college funding for their children or grandchildren or real estate working capital or whatever, so that it's protected from the negative impact of taxes, inflation, and market volatility. So I'm very concerned about what President Biden has up his sleeve. So let me share with you, because this is not about politics. This has nothing to do with a political agenda, but I know what's about to happen, and it's going to affect nearly every American citizen. Unfortunately, we're here because we have a current administration that is trying to pass a lot of spending. We already had spending that was double what the IRS brings in income in an entire year. About $5 trillion is what the IRS collects in taxes in a year. And because of the COVID-19 pandemic and so forth and the stimulus packages that they've passed, they've already spent double what they bring in. Now, hello, I mean, if we as American taxpayers made $100,000 a year, but we constantly spent $200,000, how long could we get away with doing that? But see, when government does that, they have two choices. They have to either raise taxes or print more money, which causes inflation. So that's what's happening right now. And right now we see also an infrastructure bill as of the recording of this video, another $2 trillion, and it's just getting a little bit out of control in my opinion. Now, this is nothing to do with Republican versus Democrat, because I have talked to audiences for over 46 years, and it doesn't matter whether they're Republican or Democrat. When I put a chart up on the screen and I say, here are the general categories where the government allocates money, but I don't show the percentages, just the categories, and I say, now, if you voluntarily could give your social or civic dollars, because we all must contribute back to society, and most governmental systems in the world have a method whereby you must give back to society. And that normally comes in the form of taxes. I'm a red-blooded American. I think we should all pay our fair share of tax. But when I ask people to write down what percent they would allocate to certain areas, it never comes close to where our government actually is spending our tax dollars. And so my question is always, golly, how did we get here? So I'm going to show you at the end of this episode how you can sort of redirect otherwise payable taxes to causes you support. But let's go through and show you where President Biden is proposing that we raise taxes and what's going to happen and what it means to every single American citizen, not just the high income earners, no matter what they tell you. So here we go. Follow with me on the screen. I'm going to go through these one by one. So under Biden's tax proposals, he wants to increase income taxes. He made that very clear during his campaign. He basically said he wanted to repeal the Trump tax cuts. So long story short, way back in the 1980s, in 1986, President Ronald Reagan wanted to simplify taxes because the highest tax rate for high income earners topped out at 70%. And he realized, you know what, that actually hurts people. People resent giving up 70% of their income that they worked hard for. So he realized that in history, even clear back to biblical times, if you taxed people more than 1/3 between federal and state and local taxes, they began to rebel. They began to give up and say, why hire people? Why expand? Why work hard? Because we just have to keep giving it away. So he lowered the highest tax rate back in 1986 to 28%. There were two brackets basically. Prior to that, there was like 6 or 7 brackets. So there was a 15% for the low income earners, and then 28% was the most you would pay. Now, from 1986 until the turn of the century, through the Clinton years and so forth, they introduced 6 brackets again, and they raised it back up to 39.6%, and they did away with a lot of the deductions. So the new 39.6% highest tax rate was sort of like the old 70% because you didn't have all these deductions you used to have. So here we were at 39.6%, and then Trump gets in. Now, Hillary Clinton wanted to raise income taxes to fund a lot of her initiatives, Medicare for All or whatever. And so the Bush administration, after the 9/11 terrorist attacks, actually lowered the 28% bracket for couples making over 70,000. Now it's over 80,000. That on all dollars over that, you used to pay 28%. He lowered it down to 25. Well, Hillary was going to raise it back up to 28 again. Instead, Trump lowered it down to 22. So Biden says, I want to repeal the Trump tax cuts. It actually hurts low-income earners, and he said he didn't want to do that. So he's sort of having to backpedal a little bit. So he says, I'm just going to raise taxes for the high-income earners, the people that make over 400,000. That's couples making over 400,000. No, this is going to affect everybody. So stay with me and I'll share why. But he wants to raise taxes indirectly that will hurt every citizen because of what he's doing. And a lot of times politicians don't understand the ramifications of raising taxes like corporate taxes and so forth. So he's going to increase income taxes directly or indirectly to get more tax revenue from the money that people make. The next is to reduce the 401k tax benefits for especially high income earners. So what Biden's doing in a nutshell, instead of allowing pre-tax contributions to a 401k, let's say a taxpayer makes $100,000 a year and is wanting to save 15% into a 401k on an annual basis, that would be 15 grand. They would heretofore only have to report 85,000 of income on their tax return. He wants to change that and make everybody report the entire 100,000 on their tax return. So you can't fund it with pre-tax dollars. He wants to give you a tax credit. He's talking about maybe 26%. This helps the lower income earners maybe look at an IRA or 401k. But for middle income earners and higher, that is an increase in tax. Because many people are paying more than 26% in marginal tax rates. And so a Roth IRA or 401k would be better than a traditional IRA or 401k for those people. But I'm going to share with you at the end, I've never owned an IRA or 401k, never will. I've never owned a Roth, never will. Because my favorite vehicle knocks the socks off of a Roth. Roths only have 2 benefits. A laser fund, my favorite vehicle, has 6 benefits. 3 times the benefits of a Roth. Okay. He's going to get tax revenue by taking away some of the tax benefits for higher income earners on 401k contributions. Now, what about the capital gains tax? He wants to dramatically increase the tax on capital gains. A capital gain is what you realize when you sell a highly appreciated asset. If you bought stocks or gold or silver or whatever, and later on you sell it for a higher price, you have to pay tax on that gain. Most people's capital gains come from buying real estate properties, a home or a rental property, where sometimes people pay, $250,000 for a rental home 30 years ago, but it's gone up in value to $1 million or more in many states over a 30-year period. You sell that for $1 million, and that's a capital gain. Now, heretofore, if you had a capital gain, and a lot of times people depreciate the property down, so it's almost a full $1 million gain. If you get taxed, a lot of that tax is because of inflation. If it now is worth $1 million, a lot of that is because the cost of living just went up. If it appreciated at 5% a year, 3 of those 5 percentage points was just the cost of living going up. And so a lot of times politicians will say, well, that's unfair to tax people for inflation. But when government is hard up for tax revenue, are there with their hand out because there's a title company there and $1 million is going to cross the table and they want to get their money. Under usually Republican administrations, they cut the tax in half down to 20% max. I sold a commercial building about 1.5 years ago, and the capital gain is added on top of your income. So if you have a highly appreciated asset, it's going to probably force you up to the highest tax rate. That was 20% under Trump. Biden wants to take it up to ordinary income tax rates, which would force most people up to 39.6, double. Not only that, he wants to do away with a step-up in basis on long-term capital gains. What's that? Now, if this is intriguing you already and you can think of somebody who ought to watch this episode, please share, click like, comment, subscribe, and when you do subscribe, click the little notification bell so you'll be notified every time I post an in-depth answer to a financial question, which I do almost on a daily basis, okay? And stay with me to the end because I want to gift you a copy of my most recent best-selling book that'll show you how to diversify and create the foundation for a tax-free retirement so you're immune from all of this. I've been doing this for over 45 years. When people finally inherit a piece of property or it's gifted to a charity, let's say you inherit a rental property from your folks and they paid $250,000 for it and they depreciated it down and now it's worth $1 million and you inherit it. You would get a step up in basis. You only have to pay a capital gain tax on what you sell it for over and above what it was worth when you inherited it. So a year later you sell it for $1,100,000. You would only pay 20% under Trump on $100,000. That's 20 grand. What Biden's proposing is you do away with the step up in basis, and if you inherit that, you're going to have to pay 39.6% plus 41 out of 50 states has a state tax also. You're going to pay probably at least $400,000 in tax instead of $20,000. He needs the money to fund a lot of his healthcare initiatives and so forth. This is huge, and a lot of people are not going to see it coming. Increase in estate tax. The estate tax is sometimes called the inheritance tax. Now, this is where whatever your folks leave behind when both your mother and father, the husband and wife, pass away, there is no inheritance tax at the death of one, leaving it to the spouse. But when the second one passes away, the children have 9 months to file a Form 706. And you have to list everything your parents owned, everything. And estate tax has not been an issue here for the last decade or more because you used to have an estate tax start out at 37% and top out at 55% on anything worth over $1 million back at the turn of the century. Now a married couple can pass away and leave behind $23.5 million of assets before there's an inheritance tax over that amount. Biden is looking at taking the estate tax from about 40% and going up to 67%. He wants 2/3 of whatever your folks leave you. And he is also looking at lowering the threshold. I wouldn't be surprised if he lowers it clear back down to $1 million, so that anything over $1 million that your folks leave behind to you is subject to the estate tax, because there's a lot of states who will charge an inheritance tax on anything you inherit over $1 million of value. That's going to affect a lot of people. See, tax revenuers like to tax people when they are leaving money behind or they're selling an asset. You have an increase in the corporate tax. He wants to increase the corporate tax from 21% up to 28%. Most corporations operate on 2 or 3% profit margins. If a corporation had $1 million of profit, under Trump, they would pay $210,000 in tax, 21%. Biden wants to raise that to $280,000 or 28%. That's another $70,000. $70,000 is a 33% increase over $210,000. Corporations cannot afford this, which is going to force corporations to lay off people. Many of them have said, when this passes, we have to lay off people. We have to change to automation. We have to shrink. We can't expand. We can't continue to do the growth that we were wanting to do because now we have to pay more in tax. They don't understand. It's going to hurt the little guy. The one that he says he doesn't want to hurt, he's going to hurt doing this because he doesn't understand economics and how taxes affect the little guy, even if you raise the corporate tax rates. They just think, oh, corporations can afford to do that. Well, the only way they can afford to do it if they don't lay off people is to raise the prices of goods and services, and now that causes inflation too. There's no solution by simply taxing. That's why the economy was booming under Trump. Now, personally, I've never liked Trump's personality, but he was a businessman. He understood economics, and that's why the economy was booming under Trump. So you have to set aside his personality or his stupid tweets and realize why he did what he did and why the economy was booming when he lowered taxes, because he raised the revenue that was being taxed. And that actually created more tax revenue than just raising taxes and taking away incentives for companies to grow, okay? He wants to raise the minimum wage to $15 an hour. That's going to hurt because when he does that across the board, there's people in the Midwest. The cost of living is half or one-third what it is in New York and San Francisco. And those employers can't afford to jump from $10 or $12 an hour to $15 an hour. They're going to have to lay off people or raise the price of their goods and services. It's already happening with gasoline and fast food, all kinds of things. So if you got a raise to $15 an hour, that's short-lived. I call it myopic. It's short-sighted because within 6 months to a year, the $15 an hour you're earning is going out the window in higher gas prices and food and services. So it didn't do you any good to get extra money, because the cost of living went up as a result of raising the minimum wage. Some people don't put two and two together. There's another one that I'm really scared about. In fact, there's two. One of them is the healthcare initiative. We've heard about Medicare for all. Sounds wonderful, doesn't it? The Congressional Budget Office, the General Accountability Office, both say, if we gave Medicare for all, it would cost $100 trillion in the next 10 years. So let's just divide 100 trillion by 10 years. That's 10 trillion a year. Wait a minute. When I'm recording this video, the government has been operating on a budget of 5 trillion. They just spent another 5 on top of that because of the pandemic. And now they want to add another 10 trillion on top of that 10 trillion. In other words, they want to spend 20 trillion when they've only been bringing in 5 trillion. That would be like a married couple making 100 grand and they keep spending 400 grand. You can't keep doing that. They're going to have to print money, which causes inflation, and raise taxes. And so they're going to have to raise taxes just to take care of that. Well, what about the student loan forgiveness? They are pushing for up to $50,000 of student loan forgiveness or free college tuition. The Congressional Budget Office says that one also will probably cost $100 trillion in the next 10 years, 10 trillion a year. Where is this money going to come from? Well, if you can see the writing on the wall, they're spending way more than they have. And if they print money to cover some of that and they raise taxes, it's going to cause a recession. It's going to cause serious problems for the very people they're proposing they're trying to help. So what can you do that's better, that will protect you in that event? So I've written 11 books. My 12th one is about to be released, but my 11th one has been flying off of our warehouse shelves. It's called The Laser Fund. And it's actually 2 books in one. One is for the left brain thinker, 200 pages, all kinds of charts and graphs explaining how to diversify and create the foundation for tax-free accumulation and tax-free income, especially during retirement. But it's for any other type of goal, like saving for college or working capital for your business and what have you. And so that's why I wrote a second book. You flip it over, and this is 100 pages, 12 chapters with 62 actual client stories of how to use the Laser Fund. Laser means liquid asset, safely earning returns, but it's been grandfathered in the Internal Revenue Code to be tax-free for 107 years. And so you can learn by stories. Here's how you can claim your free copy. Now, I'm passionate about educating people like you. If you go to laserfund.com, you can pay $20 on Amazon, but I want to gift you a copy. This is about you. This is not about me, and I'm willing to pay for the book. If you go to laserfund.com or click below, you contribute a nominal amount towards the shipping and handling, and I'll cover the rest of that. And I'll send out a copy of this book to you, and you can begin to learn how to diversify and create the foundation for a tax-free retirement or any other financial goal. There's also options there to listen and learn or watch and learn. But as you study this, I would be tickled to have you join me for educational webinars, subscribe to this channel, watch as many of these videos as possible to be able to empower you to be immune from taxes, inflation, and market volatility. Here's to your brighter future.